The US stock market has cancelled the coronavirus crash and is now in, wait for it, a bull market. ANZ shock, it pays a dividend, makes Westpac look like a real scab. And CSL and other company earnings reports, is the Aussie market set for a run? I'm Peter Switzer.
I'm Paul Rickard, and we're mad about money.
All right, Paul, the US stock market has cancelled the coronavirus crash in a bull market. How come?
Well, they're up 54%, I think, from the March 23 low, Peter. It's the fastest recovery from a bear market in history. So I don't know what the Yanks are smoking, but doesn't seem that they're too worried about the lack of a stimulus plan, although it's probably going to come, or the Democratic convention. They just want to buy, and up we go. So you've got to stay with the pace here. The US market's in a bull market.
Yeah, I guess we should point out, Paul, that the FANGs, Facebook, Apple, Alphabet, Google, I've already covered all of them, all those companies, and of course we've got, can I help me there, Netflix.
Yeah.
All of these companies have really pushed S&P 500 into record territory, haven't they?
They have indeed, and even Tesla's gone for a huge run in the last couple of weeks, so it's all buy in the US. I mean, it's good for our market, Peter. I mean, I'm not saying the US market's not totally overvalued. I can't believe the V-shaped recovery that's occurred in the stock market, but you just have to stay long here and go with it. I mean, that's the power our market will follow.
Yeah, let's go to the ANZ shock, Paul. We saw Westpac has basically said, no, we're not paying a dividend. ANZ turned around, and what kind of dividend they're paid, and how can they do it?
Yep, they're paying a 25-cent dividend, Peter. Probably a little less than I anticipated, but this one is fully franked. You remember before, go back about 6 months ago, ANZ said that it would only unpay partially franked dividends and only franked to 70%. But because they're paying a lot less out, the tax isn't such an issue. So the good news, 25 cents isn't as much, but it is fully franked. It does make, as you said, Westpac look like a bit of a Scrooge. I was pretty disappointed yesterday with the Westpac quarterly update. I mean, I think they're doing a bit like the new CEO trick. There's going to be more bad news to come out of Westpac. I thought it was already out, Peter, but they alluded to looking at the end of the year, more write-downs potentially, looking at capitalised software and some of their other investments. So we might still see some more negative news out of Westpac, and that's why the market didn't like it. The other negative that's come out of these results is that the net interest margin, in other words, the pressure on interest rates has probably been bigger than expected. So it probably does put the Commonwealth Bank result into a bit of context last week. It was probably a little bit better than when you actually look at both the ANZ and Westpac's results. So top marks to the ANZ board, at least for coming back and thinking about shareholders, Peter. And 25 cents fully franked, I'll take it.
Yeah, and look, I've got to say to everybody, Paul wouldn't let me run with this topic, but I think it's related. The fact that pensioners haven't got a pay rise is actually linked to the fact that we haven't got inflation. Inflation's actually fallen. And of course, ScoMo getting the 25 million vaccines for Australia going forward, that could be the economic game changer that will help the economy, help jobs, help business, and help these banks actually pay dividends again, Paul. See, I got it in.
You did get it in, Peter, and that allows us to move on to the next topic, right?
That's right. Let's go to it. CSL and other company earnings reports. Looking at it, Paul, is the Aussie market set for a run
Look,
higher?
I think so. CSL is probably a better report than it looks. In fact, it's more positive for this year than it is for next year, and I'll come back to that. So it's reported a profit of just over $2.1 billion. That's at the bottom end of market at its own guidance range, but on a constant currency basis, where they take out the risk of currency, it's actually an increase of 17% on last year, and sales are up by something like around 10%. That's a lot better than people were looking for. Now, the offset to this, in other words, really there's been a lot of fear about plasma collections. They wouldn't be able to get the plasma collections going in the US, and that would really hurt them. In other words, CSL has done pretty well this year, better than the market thought. Now, the offset to next year is when you actually look at their forecast for profit guidance for next year, it actually shows no profit growth on a constant currency basis. It's higher on a reported basis, but nothing on a constant currency basis. And that's because a lot's going into the cost base in terms of the actual cost of actually collecting the plasma. In other words, a lot of the plasma collection comes out of the US. It comes in poorer cities. People get paid to walk in every month and donate some blood. That's going to be a lot more expensive because of COVID-19. And also, CSL is putting a lot more money into research and actually preparing to manufacture potentially a vaccine for the virus. So a lot higher research and development expenses. So they're not banking any revenue. So I think, notwithstanding that, the market's going to like the CSL report. Now that brings me on to another topic, Peter. Interesting, CSL had a big rally yesterday ahead of this result. Go back the day before Monday. For some inexplicable reason, the banks got hammered on Monday before Westpac reported its quarterly update on Tuesday. I got a feeling here there's a bit of leakage of information going on, which is not good. So we haven't normally seen that. The other one on today, there's lots of reports out. A2 milk, that looks a really strong report. I think the market's going to follow the US here, Peter. Although reporting season hasn't been that flash, it's not that bad either. And you're just going to take the lead out of the US here.
Okay. Is there one stock you like to buy as a consequence of reporting season so far, Paul?
Well, look, JB Hi-Fi is the top result. I still think it's best position. I think A2 Milk, I just looked at the headlines, Peter, this morning. I haven't studied in detail, but around 33% earnings growth and sales growth. I still think that's a great company. That's probably the one I'd still be looking to buy. That's early days, but we've got a lot of news to get through.
Okay. Well, I'm Peter Switzer.
I'm Paul Rickard, and we're mad about money.